Why is Bitcoin pumping? Why are the altcoins following? And above all, what is the next support level to break to potentially reach $100,000, which is both a technical and a psychological zone? That's simply my take on it. This is today's update with a statistic that clearly shows the crypto market has nothing in common with what it was at the end of 2025, because in just 5 days, more than $260 billion have been added to the total market capitalization. In the market, Bitcoin is already up more than 7% since the start of the year and is on its 5th consecutive bullish candle. You can see it here, and we're currently testing it. At this level, 94,500 or even 94,000, which we've tested several times here and have never surpassed. So if we ever close a daily candle above 94,000 or even get confirmation above 94,500, we could then aim for $100,000 and even see $102,000, which in my opinion will be a very important resistance zone. But as I told you, we're no longer just seeing a simple technical rebound here, because the market seems to be absorbing much more. In fact, all the selling pressure is being absorbed while the market continues to push much higher. And we have this key level precisely of 94,000, 94,500 to break through. As long as Bitcoin doesn't print a solid daily close above that threshold, the market remains in what's called a rather fragile range. But if this level breaks, we could go much higher. So we're actually witnessing a market structure that's regaining strength. It's a good sign for the market, which had been moving sideways for quite a few days now, around $87,000, $88,000. Maybe we've had this local bottom. Let me know what you think in the comments, by the way. Are we seeing a dead cat bounce? That would be interesting. It would be interesting to have your opinion. But let's move on to an important macro point, because it reinforces what we've already been seeing in the crypto market since the beginning of the year. That is, historically, January is one of the most successful months for US stocks, and the numbers speak for themselves. But be careful. Speaking of months, October, November, and December were historically bullish months. And in the end, it turned out to be the complete opposite. So you have to be very cautious with these statistics. But what you need to know, and if you look at this chart, is that since 1928, the S&P 500 has ended January up more than 62.2% of the time, making it the third best month of the year in terms of probability of positive performance. And over nearly a century of data, there have only been 37 out of 97 Januaries that ended in the red. In other words, statistically, January is more of a launch pad than a wall, but it's worth keeping an eye on how things will continue for the rest of January. And on average, January posts a gain of 1.2%, making it the fourth best monthly return. So when January ends up, the whole year finishes positive in 80% of cases, with a median gain of 11.8%. And especially when January actually exceeds, and you can see it statistically, plus 5%, the year has historically soared with an average return of over 16%. This analysis also has an impact on the crypto markets. Why, in your opinion? Because Bitcoin and risky assets evolve in an environment where liquidity and macro sentiment play a decisive role. There's not much point in repeating it, you already know that. But what you need to know is that a strong start to the year in stocks is generally a favorable tailwind for cryptos. And if January 2026 unfolds like many previous Januaries, we could be witnessing the start of a much stronger year than expected. I'm taking a sip because I'm really thirsty. I won't make it through the whole video otherwise, but there's also some explosive news about the Venezuela Bitcoin case. I mentioned it to you a little bit yesterday. Let's listen to a bit of this video. None of this is confirmed, but if the European Union takes these coins and adds them to its own strategic reserve, you're looking at additional BTC potential that will... So what you need to know is that this time, this information relayed by CNBC shows just how seriously the topic is starting to be taken outside the crypto sphere. Because according to them, Venezuela has quietly accumulated a Bitcoin reserve worth several tens of billions of dollars. So nothing here is officially confirmed, but the mere fact that mainstream media are relaying this hypothesis shows that the idea is no longer seen as far-fetched. And there's even CNBC, which adds a crucial point. If the United States actually seizes these BTC, these Bitcoins, and adds them to their strategic reserves, it could lock up a fairly massive amount of Bitcoins for years. So concretely, what does this mean for the market? First, we could see a lasting withdrawal of such a quantity of BTC from circulating liquidity. This would mechanically reduce the available supply. And in a market already structurally limited by the scarcity of the asset, that's a decidedly bullish factor, so definitely bullish, and that's over the long term. Secondly, it would set a historic precedent with a sovereign state actually getting its hands on a strategic reserve of Bitcoin, and a country like the United States that could decide to integrate it into its strategic reserve, its financial reserve, and its military reserve. So we're not there yet, clearly, but if this scenario comes to pass, it would be one of the biggest geopolitical shifts ever seen around Bitcoin. It could give Donald Trump the idea to do the same for other countries. I mentioned this to you in yesterday's daily update, but also we talked about it several weeks ago, but now it's becoming a reality. That is to say, Bank of America is now officially recommending that its clients allocate up to 4% of their portfolio to Bitcoin and crypto. So we're no longer in what you might call internal rumors, where a few isolated advisors happen to be pro-BTC. No, here we're talking about one of the largest American banks with millions of clients and thousands of financial advisors who are now formally including crypto in their strategic wealth reserves. So it's exactly this kind of recommendation that acts as an institutional green light, if we can call it that. And wealthy clients generally follow this kind of guidance because they are given very clear advice and directives, which means that potentially billions of dollars in inflows could occur over the coming months, or at the very least take place, just by sticking to the standard allocations, in fact. Then here we're talking about 4%. Next, this breaks a real taboo because up until now, traditional banks have avoided putting their reputation on the line for Bitcoin, because it was criticized, because people talked about money laundering, terrorism financing, and its volatility. But today, these banks are starting to consider it as a normal diversification asset, just like gold or international stocks. So if you were looking for strong signals for 2026, we clearly have them with Bank of America opening the door. And as usual, the others will soon follow. We're already starting to see, by the way, the first signs of a return of risk coin. I had to tell you about it. And as usual, when the market quickly regains confidence, it's the meme coins that kick things off. And we noticed that as early as this weekend. And according to the reported data, the meme coin sector jumped by 23% in just 1 week, which pushed its total market cap from $38 to $47 billion. So that's huge. Above all, it's very telling of the market's appetite, because if you look closer, you see the classic early cycle dynamic. That is, we have Doge and Shaibi, which are projects that are very similar, memes of memes of memes. Let me remind you, Doge is a meme of Bitcoin and Shiba is a meme of Doge. And both of them are up more than 20%. We also have PP, which is another meme that's skyrocketing, up more than 65%. This is typical of the return of speculation among retail investors. And what you need to understand here is that it's not just, and that it's the same coins that are pumping, but what's interesting to know is why. So historically, these assets start moving again when the market begins to loosen up. That's actually pretty good news because it means that fear is starting to subside. By the way, maybe we'll take a look at sentiment. Tomorrow, the famous fear and greed index, because personally I invest based on sentiment. I buy in fear and sell in euphoria. And right now, investors are starting to regain a taste for risk. In other words, when liquidity returns and the market anticipates a more favorable phase, here it's not a safety signal, but rather a psychological one. So does that mean the high season is confirmed? Clearly no. But if this movement spreads to other sectors, then yes, we can start talking about it, and only at that point. Let's move on to a much less cheerful piece of news. Less uplifting, I'll get there, and it really comes at the worst possible time for the industry. That is, according to ZachXBT, Ledger has just suffered another data leak, and this time it's their payment provider called Global E. So in this case, we're not talking about Ledger Live, we're not talking about compromised hardware wallets, but rather about customers' personal information, specifically names and contact details. By the way, I shared this with you on Instagram, so feel free to add me on Instagram. We're close to 100,000 followers, and maybe I'll even throw a little party or give a small gift, a little bonus to subscribers to celebrate reaching 100,000 followers on Instagram. I had received a personal letter at my Ledger address saying that I needed to scan this or that QR code. I warned about it on Instagram. I like to give warnings so that people don't get scammed. So if you received this letter, feel free to mention it in the comments, by the way. But actually, my address was leaked when there was that famous Ledger leak in 2022, by the way. So it doesn't surprise me, but it was really, really well done. It played on biases that we know from Ledger products, real Ledger products. And behind it, actually, it tried to scare you by saying that if you didn't follow certain steps, your funds would be blocked forever. So basically, it pushes you to scan a QR code. I never scan them myself. QR codes, so don't do it either, okay? And also share this as much as possible with those around you. Never share a QR code because you never know where that link might take you. So I was talking to you about Ledger. Even if the funds aren't at risk, because the private keys stay on the devices, exposing personal data can lead to targeted scam attempts. So as I was just telling you, you can also get highly personalized phishing attempts by mail or email. And in extreme cases, as we've seen during the year, there are also physical risks for people who are highly exposed. This kind of incident actually reminds us of something essential. Crypto security isn't just about holding your keys, but also about protecting your identity and your purchasing habits. And in my opinion, Ledger will need to quickly clarify the scope of this incident. But for users, the best short-term response is to stay vigilant because Ledger support will never contact you. And never under any circumstances will they ask for your seed phrase, no matter the excuse. That's very important to remember. Let's finish with a very interesting indicator from the side of CryptoCoin. I just realized that actually my chart has been in the wrong place since the beginning. Here it is, better positioned. And honestly, it's clearly bullish because we're talking here about the Binance Bitcoin stablecoin ratio. So it's a tool that's often underestimated, but extremely useful for measuring the purchasing power available on the largest centralized platform in the global market. And the idea is simple. When the ratio goes down, it means there are more stable coins compared to Bitcoin. So more liquidity is ready to be deployed, poured in. And that's exactly what we're seeing right now. Because if you look closely at the chart here, what do we notice? We notice that Bitcoin has bounced by about $8,000 this week. And this ratio, meanwhile, is still hovering around level 1. But if we look back, the last time this signal was this low was during the correction in March 2025, as you can see on the chart. And at that time, BTC dropped from $109,000 to $74,000 before shooting straight back up to set a new all-time high at $126,000. Which is exactly what makes the current situation particularly interesting. And that's why I wanted to talk to you about it in the daily update. It's that stablecoin reserves on Binance have increased by about $1 billion, and a lot of investors have moved to the sidelines to protect their capital. And at the same time, the drop in BTC has mechanically increased the purchasing power of these stablecoins. Because yes, the more the price corrects, the more investors can accumulate for the same amount. But the most important point, and this is what I wanted to get to, is this famous initial inflection in the ratio. Because we're starting to see a signal just beginning to rise slightly. And historically, when this ratio starts to rise again after hitting a low zone, it means that the liquidity on the sidelines is slowly starting to be injected back into the market. By the way, let me know if you're interested in this kind of indicator. By the way, we talk about it on Kojo. I'll put the link for you. If you don't have Kojo yet, this app that helps you become a better investor, there are hundreds of us on it. Thank you for your trust and your loyalty. We're rolling out some really interesting features and we've been getting great feedback. We have between 86 and 90 for a 100% satisfaction rate. Thank you for all your feedback because this is my app, which I launched with my team, the result of 5 years of work, but it's also your app. And the goal is to make the app that suits you best. So there you go. Don't hesitate to sign up for Codejo. Prices are going up. Right now it's 25 euros per month, and in a few months will easily go up to 50 euros per month, increasing by 5 euros at a time. So take advantage of it, because after that, the prices will be locked in. They'll never be as low as they are now. I'm also directing you to this video. If you haven't checked it out regarding the changes that happened with the new year on January 1st, 2026, go watch it. It hasn't gotten many views, so I think I needed to promote it because there are changes regarding taxes and you need to be aware of them. I'll see you tomorrow on Codejo on YouTube. See you soon. Until then, take care. Bye-bye.